It's the weekly 30/30 trading list on the ASX. We're reviewing the 30 best momentum companies over the last quarter and the top 30 companies that have had the best improvement this week. Gary Glover's been through both lists and he's pulled out the best charts to look at, the ones that he's going to walk us through and the opportunities that he's finding within it. Good morning, Gary. How are you?
Yeah, I'm Brett, Chris.
Had a little time off. We've come back. We're looking at the list. The market has touched on new highs. We've had some inflation data come through, and we've had some interest rate expectation changes. We're driving this through. It does give a bit of kick to the whole market. When you work through and have a look at the quarterly leaders, so those that have had the best movement in the last 3 months, what's standing out to you in this top 30 list?
There's some pretty good setups actually there. So, there's a ton of BCPs in the quarterly momentum. A few couple of handles in here as well. But yeah, there's some pretty good lessons actually in the quad leaders as well. Some strong there. I was just saying to you just earlier, feel like most of the stocks in the quarterly here that have done pretty well are on my watch list. So I feel like I'm finally watching the right list. So like a lot of these stocks have made my scan list. So apart from the 300 every weekend, I'm looking at momentum. I look at the sort of strongest monthly and the strongest 6 monthly, and look at the relative strength, obviously, as well, which stocks are holding up here. And talking about these tight consolidations of ECPs, the cup and handle sort of consolidating near the high, just under the high. So those sort of things. So yeah, so some really good lessons there. Number 2 on the list there, Finley, was sort of one that actually, that I was actually watching pretty closely there, but I just didn't trade it because I was been away the last couple of weeks. But this is one that really had that, again, they had that really powerful surge, some pretty decent volume on the way up here. And then it went through a consolidation pattern there. It went through a little bit of a breather there. So it did punch through the 50, which is probably a little bit of a negative at the time, but it did sort of recover and then pull back here. What happened there in the first little pullback there, volume sort of dried up there. There wasn't too much selling there. And then we started to see a bit of volume there. If we're looking for, what I consider to me is looking for a little B-wave break there. So once we broke above that 102.05 there, could have been, buying this up 103, 103.5, somewhere. Really did kick on there. So that's the sort of, you're looking for these consolidations. They can last a bit longer than you think. But yeah, you got to wait for the break here. So this was a really good little break here. But by the end of the day, you actually had a pretty strong move. Clean break here, so you could have even added to that late there. That's the sort of thing we're looking for there, sort of that strong move, strong volume, having a breather, consolidation, then waiting for a little break here. It's when you see these tight consolidations there, you always want to jump in early and try and start building early here. You want to sort of try and cheat a little bit. So from personal experience, I don't think it helps. Yeah, and because they can sort of drift down lower. So then you sort of, if you jump in early, and then they drift off again, and they consolidate further, or even go to a new low, because you might have thought this might have been the low in here, and try to jump in here, and then all of a sudden it takes you out. So you get knocked out, and then you're coming back in again, and then maybe you get knocked out again. So you're better off just waiting here, because if you wait patiently for the momentum and it comes through, then, you're in the trade the shortest amount of time, hopefully for the largest gain there. So that's probably the one observation that, from experience, I've just been, I guess I spent, with momentum there, probably spent the first year trying to cheat a lot. Didn't pay off there. I think, you lose, for the half that you sort of get in early on, the other half will tap you out. Yeah, then you come back in, and then you're probably tempted because you've already lost on it. And with the smaller one, like a lot of these ones are sort of smaller too, so the percentage moves can be decent as well. When you're sort of trading those sort of stocks under $1 and stuff, or 50 cents there, the percentage moves a bit larger, so you have to sort of start sort of smaller there. So that's anything. If you are going to cheat there, then probably start small. You don't want to get sort of stung there, because the percentage moves can be quite bigger on the small ones there. But from personal experience, I think you're better off just waiting for the move there. Number 3 on the list, there was a bit of a VCP in here, Chris. Sort of whole thing, it's a bit illiquid there, but had a few little jumps here on some okay volume through here. So there's actually sort of signs, the whole thing was sort of tightening up here. And I think it actually sort of tightened up under the high as well. So a little bit of a coming hand, but just had that sort of classic, some good sort of healthy volume there, and it sort of tightened up here. And then once it's sort of gone through, it's sort of kept going there. So that's interesting. A little smaller, so a little harder there. But RDM, so another little sort of VCP there, Chris, as well. And I know you sort of want to see your little, possible little cup and handle in here as well. So although maybe the handle's a bit lower here, still pretty tight. Nice little jump here, so this doesn't look too bad here at the moment. It looks like a bit of a game changer sort of volume too as well. Bit of a gap up here, strong volume. We saw here that we had pretty strong movement volume as well previously. So yeah, for a small one here, that doesn't look too bad. RDM, obviously red metal, so that's in that sort of right space at the moment. SDX is another small one there. Look, a little bit of VCP, that little tight, I guess you get that little, had a nice little surge here, some pretty decent volume through here. So pull back here, okay volume again, but the whole thing starts to tighten up here under the high here. So, and we just had a bit of volume here, maybe a little coming a little late here, but probably too small for me personally, but just the right type of sort of setup there. So, but I guess the one thing we sort of see, still seeing some of these smalls, quite, plenty of smalls on the list as well here. So BetMakers has had a bit of a jump here as well. So it's probably one just to keep an eye on the watch list there, just because it's definitely like it's broken this little down. I mean, it's been a downtrend for quite a while, so pretty bit of an ugly trend here. But now we have broken above some swing highs, and we have seen a bit of volume here. So it's probably just one just to keep an eye on there. It's maybe too small for me. I like them over 50 cents, but yeah, it's probably one to add to the list there. I thought this is one actually that was on my list, Chris, ABH there, just because I noticed it had a bit of a bounce over the 50, pulled back, had a bit of a bounce again, and then congested there. So it was actually setting up as a possible VCP here, and it did go through and fail here. So end up sort of failing as a VCP. Did pull back here again, but this pullback here is larger than this move. So that sort of cancelled out. If you're looking to sort of come back in here again, that sort of cancelled the VCP out for me. I did sort of watch this. I didn't sort of trade this at all. But when I saw it pull back here, that was a larger move than this pullback. So that cancelled the VCP out there. What did happen was that it did jump up here and then consolidate back here. And then, if you see there, what's happened there is it's gone above that high there and then consolidated above that. So basically it's, gone above the old high and then basically consolidated above there. So that's a pretty good sign there. When you're seeing this here hold here, first day up here, you could have probably followed that, because once you sort of sit on top of the old high and find a support there, and it was low volume in there as well. Look how might have been one day of selling there. All the rest was pretty light here. And that was pretty good volume too out of that little gap there. So that's probably the first time to look at it there coming out of it. But obviously it has kicked on since then. So so sometimes these sort of stocks, they can fail and they can also declassify them there. But pays to sort of maybe watch them a bit longer, rather than just, sometimes I would, if that VCP got cancelled out, I'd probably just, in the past, I would have just got it out of my list and then it disappeared, stopped looking at it. But they can reset up again. This MRL actually, another nice VCP in there, Chris. So good little move there, good volume, pulled back pretty deep, but then it's had another little jump here, and the whole thing sort of tightened up here. So that little tightened up here. Once it sort of popped through here, had a little throwback then, but then it's gone straight through again. So you can get these little throwbacks there, but that's a good little setup here. Pull back here and we're off again. So that does look okay to me. VWE. I was just saying, look how tight this has been in there. Every time this is a nice VCP in here. Had a really impulsive move, some pretty sort of chunky volume in there, which is pretty good. Dried up in there, gone sideways, chunky volume. dried up again, bit of a pop, less volume, but look at the pullback there, no volume again as well, and then starting to, yeah. So all I was even looking at this the other day. I thought, wow, this thing, the whole thing's tightened up again. There's not much selling in there. It's still not too much. There might have been one that was a sort of probably an update there. The volume came straight back in again. I thought, wow, this is actually looking pretty robust there. So look at this.
And you would have looked at this list before the breakout today.
Yeah. So I actually thought this one looked nice and tight again. Like every time it's tightened up here, it's looked pretty good. Look, it's kicked on. Look at this. So every time it's kicked out of this little tight consolidation pattern, it's moved here. So this looks like it's probably going to get to a new high again. So, but yeah, look, probably a bit not the most liquid there, but okay then. Polynovo was another one there. Look, had a little sort of consolidation here, and then popped out. I guess that was a little B wave break here, and it has gone there. Did pull back a little bit here. I guess it did come back to the 50, maybe like an ABC in here, but probably come back a little further than you wanted here. But you look at where it's come back to, Chris. Again, it's just come back to that. This is the first sort of high here, run through there. It's just sort of come back and just sat above that old high. So look pretty good there. And then again, once you go through this B wave again here, I look at that for the first lower highs come back in here. It's had a few days in here, but really that the day came in there. Once it went through the B wave, the volume came in. So yeah, that's why you just got to be patient. You just got to wait for them to sort of break above those zones there. And then they'll move pretty quickly here. So yeah, it's a beauty of sort of being patient, sort of waiting for them there to come through there. MP1 was on the list as well. So it's funny, this is set up a few times, Chris, that little game changer trade there. If you remember earlier in the year, that had this sort of gap up on pretty good news, had a little ABC consolidation, and then just keep going. Plenty of stocks have done that. I think, Neuro, NEU did that. I think Helix did that. There's just quite a few of them that reported pretty well and sort of gapped up, maybe consolidated, kept going, or just gapped up and kept going. This again, these sort of leading stocks have had sort of cooled off, starting to sort of break some of the B waves. I think last week we sort of, might have been 2 weeks ago, I was talking about a lot of the growth stocks in Australia. While the Nasdaq was at new highs, all our growth stocks were sort of, I pulled back and we're having breathers then, or starting to push through. So I've seen quite a few of them actually sort of gap up here really and break through the B waves there. So, but that's a sort of gap and run there, which is that sort of classic sort of trade setup there for the day traders, you might sort of say. That's the quarterly list.
Right. So when you've looked through the quarterly list, the next one is the weekly one, which is the Launchpad. Are you noticing any themes that have come out of this week's Launchpad?
Not really any overriding themes there. I mean, there was a couple of golds in there, which I thought was interesting, but not too many. But there was a lot of small companies in there as well. So it was I thought it was a bit of a mixed bag, and pretty smalls in there. So, I mean,
I think you've commented on this a few times before where the market, when it bottoms, normally it's the large caps receive the money first, they go up, they take the index with them, it rotates, the confidence trickles down, it goes mid caps, and then small caps and micros. And when we start getting those smaller micros, that can sort of be late stage. And what's looking out of the numbers in the Launchpad for the last couple of years is that when we tend to see that happening, unless there's a really strong theme happening, like a uranium or a lithium that's lighting up the list. And as you're saying, the golds aren't really, there's a little bit, but nothing's really shooting the lights out. They can be a bit late stage. So I'm not sure, like you cover the cycles and more of that kind of thing in greater detail, but is that echoing sort of the large, the mid, the small, the micro? Is that kind of what's...
Yeah, I was thinking exactly the same thing, Chris, there. Obviously, there was a lot of small names in there. So is that telling us there because by the time we get to the small caps are all running and gapping up there, that can be a bit of a telltale sign that we're probably getting late stage in the market, probably getting a little tired there. So yeah, that was probably the observation for me. But I'd be curious for us to because we've been sort of collating this data for a while now, go back and actually look at those previous peaks there and see whether we're seeing the same sort of setups. I think we are. I think we're sort of commented a few times about seeing these sort of small ones come in late here. But we'll see how we go in the next couple of weeks there. But yeah, definitely seeing, I was seeing signs, some cycles actually. A lot of stocks are all running different cycles, but running into a bit of a potential sort of cycle highs here at the moment. So all from different sectors as well. So that's telling me just to be a bit cautious here. And I guess the small patch running here is telling me a bit cautious as well. So, but on that, I guess that's probably the theme there, just to be, but you can still run there. I notice that oftentimes when I get this bearish there, after the market's had a pretty good run and I feel like it's all the cycles are aligned, you can still see some of the sort of smalls and maybe some of the growth still continue to push on a little bit further. You just might start to see a few failures as well. That's all. But yeah, number 2 on the list there for the Launchpad was NISC, which is sort of nickel. So definitely seeing some of the metals that have been a little bit, copper, nickel, that have been out of favor there. That's sort of starting to sort of pop into favor here. So NIC here, look, it's had a nice jump here, some good volume there. So now this is sort of this should go on our watch list, Chris, because we've sort of, even though it's a pretty nasty downtrend, we're starting to sort of break above some swing highs. We've actually got a bit of volume in there. So we've got a potential change of character there. So we just want to, it's a bit early here. We need to sort of see some sort of consolidation, sort of bit of a breather, sort of tightening up here. But definitely one to keep an eye on there. I think we talked about BET as well. Yeah, that's a possible change of character as well. So again, a bit small, but definitely change of character. Select harvest is sort of interesting to me because the one thing I've sort of noticed with we saw elders and a few of the, I think I traded rural funds, and there was a few others in that ag sector that have been running hot there. So I noticed that Select Harvest had a nice little bounce out of the low. So it's hard to pick lows there because they just keep going down here. So you're really looking for a little bit of a pop, some sort of little consolidation, and then a little breakthrough there. So if we're looking for looking for at least a little B-weight break here, in my opinion, that'd be the first sign here. You're sort of looking to sort of get in around here, so around 312, 313, something like that. But it has sort of kicked on. Honestly, it's reported pretty well here. So ag space has been pretty strong here. It's been much stronger than everyone's been anticipating. So definitely when you sort of, as Stan Weinstein sort of said, if you got two sort of chart setups and one's in a strong sector and the other one's in a not a strong sector, the performance is a lot better in the strong sector by a long shot. So so it's okay to be looking at charts all the time there, but if we can overlay that with sector strength, then that gives us greater confidence to sort of trade those trades there. And that's kind of one of the classic phrases from, if you read anything from Weinstein there, it's probably one of the best quotes that he's, in my opinion, that he's made there.
Well, we've on the ASX and all the numbers we run, if there's a strong sector, the likelihood of hitting the target pretty much doubles for the type of trading we do. So that's great insights from Stan there.
Yeah, I mean, it's what, if you're over 50 and you're exercising twice a week, your chance of cardiovascular disease drops by 50%. So it's a very significant stat. So really, we want to be basically trading in the stronger sectors and the stronger sort of setups there. So if you are looking for a chart and you see two come up and you only got enough capital left for one, then you take the one in the stronger sector, not 99 times out of 100. So and because the odds are sort of like just say twice, in your favour there. So good lesson there. Basically, I thought it was interesting there. Just it's had a bit of a pop here, a bit light, a lot of volume there. I'm going to suggest here you want to watch this one here and see if it sort of holds up under the high. But today, it hasn't held up so much here. So we would have liked to have seen a little slight consolidation under the high here. But today's price action is basically saying no. MRL. We talked about this one previously there, just nice little BCP in there, not too bad, a little small. EGL sort of one that's sort of interesting there. That's sort of, a bit exhausted, pretty deep low, pretty good volume out of that low. So a bit of a change of character. It's come back and it's sort of been building. It's been really slow here, but has sort of come back, made a bit of a false break here. Some good volume again, a bit corrective. Some okay volume again, a bit corrective again here. So this is what I've been watching here because I like the characteristics there. Yeah, it was a funny company there. I think 70% of the shares are held by the founder now. So he's just been buying his own. He just keeps buying his own shares here. So they did go a little bit hard early and try and scale up sort of like acquisitions there. So got themselves maybe a little bit too geared there, but I think we've laid off here in the last year or two there. So definitely one to watch here. But yeah, that's sort of building quite nicely there. It's just some good volume sort of coming in and then having more of a corrective type of pullback here. But yeah, it is one of those funny stocks to trade there. It's all it sort of it does move around a bit. BC8. Well, this one was interesting. Chris, again, we sort of had some okay volume there, broke a few swing highs, so maybe change of character. Has sort of pulled back here, but this has been a bit corrective here, sort of more of a sideways move. Just sort of starting to climb out of here. A little small for me, but not the worst looking chart. Black Cat Syndicate, WGX. Again, just been showing a bit of relative performance here in terms of the, like a lot of the golds have probably been okay without being great here. I think most of them have had a bit of a pullback, not big pullbacks, but have just had a bit more of a consolidation there. But I this has sort of gone up to a new high here, but sort of showing signs of failing here first, but it's pretty early here, but has showed a bit of relative strength there. The Z was the last one on the list, set up a little gold stock there. Again, probably big sort of ABSA correction there. It's starting to build here, but again, pretty small, pretty lightly traded there, so nothing too obvious there. That's kind of really, that's me there, really for the list there. Wasn't too much in there.
Well, as you've been working through the week and looking at the charts, at the sectors and understanding the cycles, what's happened with the macroeconomic push, inflation, interest rates, and so on, are there any trading insights that have come to you that you want to share with us this week?
The couple of there's I was listening to I've listened to a few different sort of podcasts and stuff there. So I was listening to sort of something about listening to Inky Johnson there, which talks about sort of work to separate. So it's kind of more of a motivational quote here, but basically sort of do what others want so that you can have the results that others won't. So if you're sort of a trader out there and you're just doing the average amount of work that a trader does, then you can really only expect average results. So you've either got to be doing it differently for everyone else or doing more than everyone else if you really want to separate yourself from the pack there. So, and we talk about the best traders there, they do sort of hone their craft, narrow their focus down. And some of the best traders are really just trading maybe one or two defined setups and a really tight disciplined sort of process there. So if that's doing it differently, or otherwise, if you don't really want to be, honing yourself into, really fine tune your process there, then you really need to be doing a lot more work with everyone else to sort of, if you really want to get those outstanding results there. That was the only sort of thing there. I did think that inflation over during the week was actually pretty good, Chris. That was came in at 0.6 versus 0.8, so it made the year number. So it was still pretty high, but that number is coming off pretty quickly. So that's actually really good. So when I did see that, I thought, I was thinking that inflation number might have been a little higher there. So I had a little short on going into the inflation read, and as soon as I saw the number, I was out within 2 minutes, so didn't have a big position on there, so it only cost me a few $100, but that was a good number there. But at the end of that day, the market took off and it kept rallying, and I think at the end of the day it finished pretty strong. But gotta remember too. I went home that night and I was thinking about it. Markets find lows on bad news, on the worst news. So highs come in on the good news and the very best news, and that inflation number was awesome. That was probably, it made me sort of think that night, is that as good as it gets? Because we've really had the inflation really, come off quite a bit here, and there's been some talk about Australia being pretty slow. I mean, obviously we're sitting a little lower cash rate than most other places around the world, and yeah, so just some concerns about whether that number was going to be high enough to sort of cool things off enough here. So yeah, but it does have me worried there that maybe, I mean, the banks are trading on 20, 21 times here. You got iron ore sort of, everyone did that wrong, so that they're all pretty highs as well here. So just maybe definitely sort of went away thinking, wow, that is, that this might be short-term peak here, because everything's just, and then everyone's starting to turn really positive as well. Like this sort of whole bull market, there's been a real reluctance to get involved early. Everyone's been quite bearish from the start. And now everyone's just now starting to sort of see bluer skies, starting to see, all the good news is starting to come out here, but it's always a case of sort of, buy the rumor, sell the fact here. So by the time all the good news is out, market's already sort of priced in and moved up here. So just a little concern for me. I don't know if you got 1 minute for me just to show you just a couple of things out. I mean, I do look at some time cycles, and
well, while you look at that, I'll just always on while you load up those screens. The mass media, just general media, was ABC radio, and they were starting to give credit to Dr. Lowe, where he'd really been bagged out by general media and saying risen too much. I know you'd said not enough in comparison to so on, but it was quite interesting that when the inflation print came out, they were giving credit to Dr. Lowe and saying, oh, now he's vindicated for doing X, Y, and Z, and he's going against the rates won't move until the end of 2023 or 3 years fixed rates. It's quite interesting that the mass media turned and were actually giving credit to Dr. Lowe and saying almost as if mission accomplished, now we can get back to normal, inflation's behind us. And I know that you've warned us about how long inflation can go for, but just echoing, when the good news is there, that's not at the top. You don't keep getting good news and markets rising. We're setting up the next move, and I guess that's where you're leading us to on the cycles, right?
Yeah, I mean, all Lowe's done is follow the herd, but follow them 6 months in arrears. So that's a good job. I don't, yeah. So we just, but he hasn't been on the front foot, hasn't got ahead of the curve. We're the last major to sort of get inflation down here. And it's still pretty high. What are we, 3.4, 3.7? So we're still not under that, not in the 2 or 3% band here. I mean, the interesting thing in the past is that all the central banks have actually got inflation down post, had a big inflationary surge, then basically lifted the rate, and then eventually, inflation is a bit of a freight train. It doesn't sort of slow down straight away. It sort of takes a long time to sort of shift and turn. So it's a bit of a slow moving beast, and that it kind of like it sort of slows down and then it sort of tips over and then sort of rolls off. So it's a really sort of slow moving. But the big mistake in the past is that central banks have thought they've got it under control. They've got to this point in the past, and then thought, okay, we've won the inflation battle, and then they've started to cut rates, and then bang, inflation's come straight back. That's why you're sort of seeing Powell sort of, he's been sort of quite reluctant to sort of cut rates too quickly here, because all the data historically, or in the past, is so if you cut rates too quickly, inflation can come back really quickly, and then it's even more difficult the second time to actually get rid of. So linger around even longer. So that's the hesitation now. That's the thing I don't understand. Most economists, if they'd read the history of inflation there, they'd understand that. So the best thing that the Fed can do here is and also the central banks is just to hold rates steady here, and then just keep the foot on inflation for a bit longer. And if they do cut rates, it's going to be a real slow transition as well. Like you sort of don't want to go too fast and too hard here. So really want to be tempering expectations there. The market's thinking we're going to get plenty of rate cuts here, but history tells us that we do that too quickly, we'll be back in the same situation within 6 to 9 months. And I think central banks seem to be a little bit smarter than the average economist here so far, which is a good sign. So if you go the other way around, if the economists were sort of ahead of the game, central banks are making all the wrong moves, then I'll be more worried. Yeah, the central banks seem to be doing the right thing here. But just one observation on the market is I do look at a lot of timing cycles there, Chris. I'm not sure if you see this.
Yeah, the 180, 90, 90.
Yeah, so like a lot of the industrials and the index as well, they can basically do like half year and quarter year cycles. Like a lot of the last runs in the market. So if you look about like a fifth wave or the last run there, the last rally in the market is often like a 3-month move from sort of, from bottom to top. I can tell you that, the crash cycle comes, every crash in history has started with a 90-day cycle. I'm not saying we're going to crash. I don't think we're going to crash at all, but every sort of major peak has finished with a 90-day sort of surge here into the top, and then a certain setup for a rolls off here. But we can see a lot of highs to highs and a lot of highs to lows. We'll do that sort of 1 quarter year, half year. So we're sort of going a high to high here, half year, pull back 90 days, sort of a quarter year, and then we've rallied up another quarter year as well. So it's still a little bit of timing here for a bit of a high here. So just an observation that I've sort of seen in the past there. We look at CBA, obviously leading stock as well here. That's sort of gone sort of similar. So it's done a sort of half year cycle, quarter year into the low, and up into the high as well. So that's sort of, CBA is at 21 times here, Chris. I think the yield's 3.7%. I mean, you can just go to put your money in Macquarie Accelerate at the moment and get 4.65. It's on 4.75. So why would you be buying this at 3.7 yield here on that many times there, where you look at the forecast earnings, it's not, there's no growth forecast for the next 2 years for CBA. So this is crazy to be up here, in my opinion. So I can see some of the stocks that, moved on there. The other one I looked at there was some of the commodities. The commodities run a slightly different cycle. They run a 144 cycle is more prevalent through some of the commodities. We can sort of see from a little high here into the low, did go 144, and we've sort of gone the same timing up into a high here. I noticed if you look at the S&P and I don't really use too many indicators, but at the moment, if you look at some of your momentum indicators, I'll be showing this peak here in the US. Some of the markets is actually going to new highs, but our indicators are actually making lower highs. So not showing the same sort of strength there. So I'm just seeing a bit of timing here right now for a bit of a peak here. So that's got me pretty cautious there with the markets, run here. The fact that, if you look through election years as well, just a lot of early or late January highs as well. It's a bit of a messy sort of first quarter, first half of the year, election year. So I think it's going to be messy. You don't get big corrections this year. That's the thing. So I don't think you're going to see any crash on it. So, but we do tend to sort of see a little bit of weakness in the first half of the year in election years, probably 80% of the time. So 20% of them can keep running there. So there's a chance here we can keep running here, but with just, everyone's got the iron ore wrong, and now it's gone gangbusters and price is pretty high here. That's to me, that's sort of, pretty peaky orientated, and that the financials are trading on massive multiples here. So I just can't see where the gains are going to come from the market. I think the last few months I've been saying probably I would just be looking at the growth stocks. The majors have all run too high. We've seen some of those growth stocks start to move here, but just got to be a bit cautious here now. I can see I can just see a consolidation ahead here. Could be wrong, but that's what I'm seeing here. So everything's just telling me to be a little bit cautious here right now.
Well, there's some good insights, and it's worked well for the last couple of years. Understanding the cycles that you've been sharing with us, knowing where the leading companies are, where the great portion of the index is allocated to, and how those companies are behaving, especially in the context of these cycles. So there's some really strong insights to share with us for the weekend ahead for us to digest. And to that end, we'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.